Hi, I'm Bert Nussbaumer from macrobeat.co.uk. I guess a few people don't mind it to be Friday, rather a rude awakening for some after the 7% drop in equities yesterday. Well, what did cause this all? We have to go back probably to last Friday when we had the non-farm payrolls, or the big surprise, positive surprise in non-farm payrolls, which led to another crazy rally without the market really trying to understand the details of the data, which I think with 21 million people still on PPP, I don't think that number is really too relevant at this point, and we still have to wait for a while longer to really see the true recovery as such. Then going into Wednesday, we see FOMC, Fed Chair Powell didn't really bring anything new. I think what people probably took away from it is he held again a very somber speech, which in my view was nothing else than really him not believing into a V-shaped recovery. Furthermore, the yield curve control didn't really come out, didn't really get discussed much. There's the usual promise to do more if needed. So at least that alone did make yields drop somewhat. Then the other part of the sell-off yesterday was probably the concern of sharp rise in COVID-19 cases across the US. One thing that worries me in particular is that 21 states that started to open up their economy really still had rising numbers. So their numbers haven't even ever peaked. So really that's, to me, is a big worry, and I hope this is not a sort of train crash in the making. But let's look at some of the slides I have for you today. The first one is the 5-year government bond yields. There we see that the blue shaded area is the area sort of post FOMC. So at least Chair Powell managed with the sort of promises and with keeping rates at zero for a long time, that bond yields were able to drop, which is kind of really what they wanted to see. On the next slide, this is just core CPI. And given that we've been sticky just ahead of this 2.5% before COVID-19 hit, we now see a large drop, which really means that the Fed policy with zero rates is really justified, and there is no uptick in inflation at this point in time. On the next slide, I have the Dow. I did bring that one back where we see the big gap move yesterday. This is not a futures chart, this is a cash Dow chart. That's why we do have the gap up there. We closed back below the 200-day at 26,360. We even closed below the 26,237 feeble support, and we traded right to this trend line of the lows from March. And so this is going to be a very big junction now for next week or the next few weeks. Is yesterday's turn the turn of the realization that maybe a V-shape is not in the making, and we start to see further weakening in equities, this sort of exuberance being over, and in return, FX risk will start to sell off as well? Or was this all a sort of 1 or 2 day wonder and the market is bouncing back next week? So next week is going to be very critical. Personally, I still believe that a V-shaped recovery is just not in the making, hence I'm more on the side of caution and potential lower equities, lower risk in FX. On the next slide, we see the huge run up the euro-dollar head, which is a sort of combination of the dollar sell-off as well as big bounces in all the euro crosses that we have seen. Things got a bit sticky just ahead of 114.50. The risk sell-off from yesterday obviously starts to create a little bit of a dollar squeeze again. Hence, there's a bit of a give back. Should risk really have turned yesterday, then there's a risk that the euro will come back off to 111.50, 110.50, and the dollar could actually start to squeeze up again. On the last slide, the Aussie dollar, we see the massive 23% rally together with risk and equities. Obviously, we had this big sell-off now in the Aussie on the back of the dramatic move in the US equity market yesterday. Bit of a bounce this morning, which I guess is natural after 7% drop in the Dow. Again, this is going to be the key for next week. That's why next week is going to be very critical. If risk has turned for good, I think the Aussie has a lot more room to sell off. If this was all just a fluke, then maybe this was just a correction. So look out next week. It's going to be very important to sort the conundrum between risk and the dollar. And I guess we need a few more days to see that. Thanks very much indeed. Bye-bye.